Good morning, ladies and gentlemen. Welcome back to our YouTube channel, and if this is your first time to be here, my name is Martin, and this is Tamara's Family YouTube channel. We create content around marriage, relationship, and good stuff. And also, we started a series of videos that we are documenting my journey as a forex trader. And I think it's very important to note that because there are so many people who are really struggling to trade forex, but probably they don't show their journey. So I decided to show my journey because I want to inspire anyone who is a forex enthusiast, or probably anyone who has ever had a thought of trading. So I want to show you exactly what goes on, because I want you to be cautious before you make that decision of I want to pursue forex. So in the previous video we discussed about we opened a small account that is equivalent to the money that we want to trade, and because we want to be realistic, we don't want to approach the forex market as gambling or in the patapotea. We want to do it as business. So we are going step by step, and I'm sorry I wasn't able to film a few videos, to bring you videos like in the past 2 or 3, almost 5 days, because I had a very bad cold. And in fact yesterday I tried to do a video and it was not possible because nilikuwa nimefungana kabisa. But anyway, it is what it is. I decided let me just do this video the way it is, because I don't want to keep you waiting, because we want to go step by step. So in today's video I want to show you how I used to document my trades and the importance of documenting trades. Like I said, this time we are going to do business. This time we want to approach the market with a business mentality. Yes, without wasting much time, let's get into the video.
So guys, let me show you how I used to journal my trades. This is my column for dates. I came up with this sheet, Google Sheet, just to document trades. So let me just show you. This is the date, column for date. This is the pair, and this is the trading session, the news, and then my strategy, how I do my technical analysis. So my trading session for that pair was random session. Opening at 8 in the morning and closing at 5 in the evening, 5 p.m. And then we have the column for news. You can see on that day there were high impact news on USD pair, on USD. So having known that there will be news, high impact news on at 5:30, if in any case I had an active trade around 5, I should close that trade, because I don't want to risk my account, because you don't know the direction of the market. So we also have the rules. I want to risk 3% of the account, which is advisable. You're supposed to risk anywhere between 1 and 3% of your trading account. So in case you have a $50 account, 3% of that account would be probably $1.5, which will be very healthy for you, because in case a trade goes against your plan, you're able to come back and trade again, so you're not losing your account. So on technical analysis bit, normally do something we call top-down analysis. We go on the high time frame, which on this case I went on day. I normally trade or do my analysis from day chart to all the way to 15 minutes chart. So on day chart the market was going long, or we were buying. On 4 hour the market was going up. There was a definite trend, which was an uptrend, or what we would call long, or in other words we normally say going long or going short. So on that day the market was very definite, was going up. And then on the technical analysis I journaled what I was looking at all the way from day one to the day chart to 15 minutes chart. And yes, so like for example in 15 minutes I said wait for market to break that level neckline, and I will look for entry for a short position. That is scalping, okay, because now a short position means I was going against the trend, which is long. So anyway, that's part of doing analysis. And then prediction: if the market breaks this level, there will be a rally all the way to this. So we are targeting 80 pips. So guys, we were targeting 80 pips, and I was going to use a lot size of 0.02. And then here I come and record. This is now post analysis. On the execution I did not execute, so results were nil. And post trade analysis, why did I not take a trade? Resistance was broken during the GDP news, which were affecting the USD, and I did not activate my sell because the bullish trend prevailed. after the news, which was a win for me. Okay, so a win. Why a win? Is because I did not lose money. Okay, so number one thing you want to do is to preserve your capital. So the fact that you do not lose your money, even if you did not make money, is a win for you. So let me come here to a trade that I executed. So this is for different pairs. Let me just show you for one that I executed. So this is another pair. It was the second week and I was looking at Audi USD. Audi USD was Asian session, opening at 5:30 and closing at 11:30. USD major news 7 a.m. So that was not going to really affect this time. So Audi major news at 10:30 p.m. So that would have at least would come later after I had taken my trade. So again, we come do our top-down analysis on daily chart. The market is going long, on 15-minute chart is going long, and then the technical analysis. There will be an interesting pair, and this will be an interesting pair this week. Major resistance level broken, waiting for confirmation at the close of the day. If the market closes above the resistance on day one or day chart, I will be looking for buy position with target of 250 pips. I took a trade after the formation of pie pattern on 1 hour, which formed at the support level. I considered that as bottom, as the bottom of the corrective wave. Let me not go and read everything, but we were targeting 195 pips, and then we took a trade at the lot size of 0.02, and then we were able to get 130 pips. Okay, 130 pips. So these are the post trade analysis. I took the trade earlier because the market was at a major resistance level, a strong spike at 4-hour chart, sign of the market being exhausted, waiting for the next move. Good trade. Okay,
and I think it's very important to document trades because you want to keep record of your transactions. Is the same way you do bookkeeping is the same way you're supposed to document your trades. And I think it's very important because at some point you get some kind of consistency in terms of how you approach the market, and also you'll be able to come back and learn from your previous either mistakes or achievements, because when you do this, it gets into your mind, it sticks into your mind. When you see some good market formations, you're able to identify because you are used to documenting, and you are used to, this kind of, you are deliberate to like document what you are seeing in the market. So anytime you see certain or specific market formations, you're able to like understand, you're able to like remember, I took this kind of a trade and it went this way, I was able to achieve this much. So that, I think that is the importance of documenting trades. And I hope you're going to, like, in your own way, you may not necessarily follow my pattern, but you can try in your own way to document your trades. It will help you in terms of maintaining some level of discipline, and you not trade forex as gambling. You be careful to approach the market, in other words. So I hope you enjoyed the video, and make sure that you like the video if it has given you value. If you feel value, make sure that you hit the subscribe button and notification bell, because we are bringing you many of these videos because I want you to like get the most out of it. So thank you very much for joining us for today's video, and until we see you in the next video, God bless you and bye bye.